everyone. Welcome to this week's edition of the Grain Gauntlet. As always, 5 questions from clients and prospects. Questions directed here to our owner at Hedge Plus, Patrick Hayes, who joins me. Right now, we've got, looks like we might have a peace deal or at least a ceasefire with Iran. Markets reacted somewhat strongly to that overnight as oil came down. Wheat has taken the biggest hit, but corn and soybeans are holding steady for now, at least. Let's take a look. Yeah, we got soybeans up 1 and corn's only down 3. So hopefully this holds up and we can move past this war and see how things are going forward. We got the UASD report from the USDA tomorrow. So a lot going on. You ready to take these questions?
I am, and I think wheat's more reacting to rain in the plains than war in Iran.
That's
Kansas, Nebraska. They're supposed to get some more rain, so that's really good for that crop. They need it.
Absolutely. All right, sounds good. First question: is the top in for corn?
Top in for corn. Wow, great question. Whoever came up with that's brilliant. Because that is a great question. We're about 25 cents down from where we were. I think there's a lot of risk in the marketplace. I'm not selling at this level. We get back up towards that level, I will be looking at selling and definitely hedging more aggressively at that point. No, there's a lot that can happen. El Nino is really kind of good for U.S. weather, at least above trendline yields, or at least slightly above trendline yields for corn. But it's devastating for weather over on the west of us, right? When the westerlies come towards the east and push the warm water towards us, that leaves colder water and less evaporation over India for the monsoon, China, Indonesia, and particularly Australia. So a lot of crop can get damaged over there with drought. This is going to be a super El Nino, according to the experts. A lot of weather risk. I think we could go substantially higher with weather risk, and I think it could be in other places, not here in the U.S.
Yeah, and we've also had strong exports this whole time while corn prices have been higher, and there's no reason to think that's going to slow down. So if we get
with Trump meeting with Z, and
yeah,
China's smart, right? They know that their risky weather is during strong El Ninos. Nobody talks about them because they don't export corn, but they grow second most corn in the world. If they drop 15, 20% in production, they got to buy that stuff. That's U.S. corn demand. That's fantastic. We could easily be significantly higher with a drought in China. So lots of weather to play out. I wouldn't say a top is in. I would say it's less likely if the war does end and this does lead to peace, but there's still weather as an issue that we haven't put premium into the prices yet.
Okay, sounds good. Second question says, why is wheat responding so wildly to the war?
As I said just earlier, I don't think it's a war per se. I think it's increased moisture over the southern plains that's helping this crop. You can kill wheat about 8 different times, and it keeps coming back every time it gets rain. This rain has fallen in Nebraska. A lot of my guys got an inch or so, and we're supposed to get some more in Kansas too. That's really going to help this crop. I think that's why it's reacting the way it is, more so than the war.
Okay. All right. Third question says, should I sell some wheat at this point?
I hate selling after a huge move down. I think this is emotional. I would not sell at this point. Next time we move up towards that level, on the way up, instead of getting greedy, make some sales.
Right. Yeah, for those who didn't this last time, yeah, maybe learn from this and take advantage when you can.
Right.
All right, this question says, do you think Trump got what he wanted out of the war with Iran, and does he have the leverage he needs with China to keep them buying from us?
Okay, 2 questions there, 2 good questions. I think he got enough out of the Iranians to really hurt what they could do. They've been building up potential warfare for 47 years, and we destroyed a lot of it. Okay, I don't think that is over yet. I think Israel will finish a job in South Lebanon no matter what and give themselves a buffer in a safer area. They definitely have set back the nuclear plans of Iran. At the same time, I think we ran into a little bit more of a buzzsaw than what we thought we were going to run into, and that this is in Venezuela. This is a country that's been preparing for war forever, and they're crazies. So we know that now. I think they have set Iran back a lot. I think that's all Trump wanted to do. And I think he will be satisfied with that unless they're totally unreasonable negotiations. I don't think they will be. I think they'll be compliant so they can start up again in time. The future isn't safe, but it's safer for a period of time. So I think he got what he wanted. He hasn't lost leverage at all. He's gotten more leverage. China can see that Israel and the U.S. can take over the Middle East if they want to and stop the flow of crude oil to them and other countries. So I think negotiating wise, Trump has a bigger stick to work with China.
Yeah, you and I have talked about this. They've got the meeting coming up in Beijing. I'm sure the goal was to have something settled before that. It looks like enough has been accomplished. It's kind of an ugly situation. I don't think we got everything we sought from the beginning. Certainly not what everything that Israel sought, but it sounds like Iran is going to perhaps even be able to charge for ships to go through the Strait of Hormuz. But in return, the U.S. is going to have a bigger say over how much oil they export and how much they charge. And that's the leverage over China we would need. And it looks like we have that in time for the talk. So this probably is overall helpful for our talks with China coming up here in the next couple of weeks.
Yeah, if it is over, then we can really focus on setting up good trade deals with China. I think they're ready to deal. So
Yeah. Yeah, and Europe's even more dependent on us as well, too. So that should help with trade with them because they are really now almost entirely dependent on the United States for energy. And that just puts us in an even stronger position with them, too. So, yeah, I think the trade objectives are probably met, maybe not all of the, peace objectives, but yeah, it is what it is.
Yeah, it is what it is.
And final question from a prospect. The large carryover with old crop scares me. If we get trendline yields, what are we looking at for prices this fall? I guess that applies to both corn and beans.
Repeated prices this past fall. I mean, we've been talking about this forever. I mean, this isn't a bullish scenario no matter what happens with the war as far as fundamentals. We're looking at 1.33 million more acres than what the USDA had called for in February for corn. You had trendline yield on top of that. That's enough to get us over 2 billion bushels again. That's $4 corn in futures at harvest time. We have been pushing a hedge position that has minimal fixed risk while it's between now and the end of July with 30 to 35 cents that you can add value to. If you can add 30 cents pretty safe with a fixed risk trade on top of the sales we get, you're going to be destroying the people around you because they're not going to have that profit in there to add to their bottom line. It's imperative to be prepared for the same type prices because we have basically the same kind of fundamentals going forward. We have huge carryout. When we have spikes, you got to be selling. You got to be aggressive. You can't wait for $5.50, $6 corn. It's probably not going to happen without a major weather issue, and that probably won't be in the U.S., maybe in Asia, Australia, Indonesia, maybe. But you're hoping for weather. Let's be smart. Let's not hope for weather. Let's be prepared for lower prices. Same with beans. I mean, I don't think we go down 960 in beans. I think 1050 futures. I just see a higher base because of what China's going to be buying from us. But fundamentally, it's going to be as weak as last year. Just better prices because better demand because China will be less of a risk. So about $1 higher for those in beans.
Okay, good. Well, that's it for this week. Thanks for those answers. Thanks for the questions, everyone. If you want to have a question answered here, obviously you can pass it along to your advisor, or you can email it to adminstaff@hedge-plus.com. We've got the WASD for April tomorrow. Not typically a report that changes a whole lot, but it's still a report day, can bring volatility. So we'll see what tomorrow brings.
Yeah, the next big one is May, when the first new crop fundamentals come out officially from WASD and the USDA.
All right, sounds good. Talk to you again next week.
Have a great week. Thank you.